Hello, I'm Doug Fabian. Welcome to ETF University's presentation, Investing in the Solutions to the Global Cybersecurity Threats. Today's presentation is all about education, information, and motivation. And no part of this presentation should be considered a solicitation to buy or sell a security, nor should it be considered personal investing advice. I also want to disclose that ISC and Pure Funds are paid sponsors of ETF University and Eagle Publishing. Now, as we are going to be talking about a specific security today, the ETF HACK, H-A-C-K, I want to make sure that everybody understands that this particular security needs to be offered through the prospectus, and you're going to be able to get that at the website, pureetfs.com. Also, realize that this type of exchange-traded fund is a non-diversified security, meaning that its assets are concentrated in fewer individual holdings than a fully diversified fund. So with that introduction, let's talk about our panelists today. Of course, I'll be moderating. I'm Doug Fabian, the founder of ETF University. We have Mark Absey. Mark is the senior index analyst, and he is an ETF manager at ISE. They are the index provider. We have Christian Magoon. Christian is an investment expert and a consultant to ISE. And then we also have Andrew Chainin. Andrew is the CEO of Pure Funds. Here is our agenda today. We're going to talk about 4 specific items. First, we're going to discuss the cybersecurity threat, the industry trends, the themes, and the potential for growth. Second, we're going to talk about the index itself. All exchange-traded funds are based on an index, and Mark Absey is going to be talking specifically about the index that is behind the Cybersecurity ETF HACK. We'll have Andrew talk about the world's first cybersecurity ETF, and then we're going to open it up to all of the panelists to discuss where this particular investing idea fits into your portfolio. So with that introduction, let me first ask Christian Magoon to join us. And Christian, you're here today to kind of introduce kind of the investment theme of cybersecurity.
Yeah, thanks, Doug, and thanks for having us today. And cybersecurity is certainly in the news and is a growing part of everyday life. If you're a corporation, if you're a government, even if you're an individual, you're now concerned more than you ever have been about the security of your information, your data, when it comes to kind of your digital footprint. There's a variety of growth drivers in this cybersecurity area, and we're going to talk about a couple of them today. We're also going to talk a little bit about the twist, the unique element of growth in cybersecurity. One thing that we're seeing is certainly the prevalence of a variety of new targets in the cybersecurity area. If you think about the number of devices you may have, the number of different accounts you have, there's just more information for hackers and criminals to go out and try to access and exploit. And that is really helping to drive the cybersecurity industry. In addition, there's all types of different methods of attack. Whether it's through your phone, through email accounts, through phishing, through ATM skimming. These evolving methods continue to create, frankly, new business opportunities for cybersecurity companies. And third, the temptation is just growing. It used to be that maybe someone had a Facebook account or maybe did a little business on eBay. Now most of your bill pay is on your personal photos. Many of your financial transactions are available online. All of these factors combine to really push kind of the growth of the cybersecurity industry. But it's not just growth we're talking about. We're also talking about growth with a twist. A lot of times when you talk about growth investing, you're talking about just areas that are growing and you're buying or accessing them in your portfolio for growth's sake. But cybersecurity really has some unique twists to it. First, it's growth, but growth that really is essential. You cannot be online today as a corporation, as a government, as an individual without really securing your digital assets. So this is very essential no matter what the economic conditions are. Second, as we've talked about, it's not just individuals that are at risk here, it's corporations and governments. Unfortunately, we've seen all types of headlines, even from the U.S. government, where many of our citizens, our armed forces, government employees, their data has been accessed, not just social security numbers, but background checks, their fingerprints. It's really kind of a diverse group of targets out there, and that's why there's a diverse group of individuals and entities that are really using cybersecurity companies, and that helps set this apart. Finally, you also see a lot of event-driven capital appreciation and opportunity in cybersecurity. Whenever a large-scale attack is announced or a hack comes to light, you see these names generally respond, these cybersecurity stocks respond. Why? Because it's generally viewed as a positive for their business. Because the more attacks, the more threats, the more intrusions, the more corporations, government individuals seem to want to buy the services of these cybersecurity companies, which ultimately is good for their underlying valuations of their stocks. So real kind of 50,000 feet-ish, what is the value proposition of cybersecurity? We're seeing that increased cyber threats, increased risks, increased awareness, and certainly increased spending are all bullish for companies that are focused on this area in cybersecurity, the hardware, the software, and the services. Let me give you 3 quick stats to remember about the cybersecurity space that really sums up some of the growth that's there. First, 66%. There's been a 66% growth per year in reported cybersecurity incidents going back to 2009. We don't have the 2015 numbers in, but as you can tell from headlines this year, we expect it to be continuing to grow. It's unfortunate because of these attacks, but it also is an opportunity for cybersecurity stocks, businesses, and investors. So number one, 66%. The second number to think of is $400 billion, almost $500 billion. That's the estimated cost of cybercrime globally. Now keep in mind, these stats are based off reported figures. More and more we're hearing that cyber attacks and intrusions are not something that companies, governments really want to report due to kind of the stigma surrounding it. So the final stat is simply taking a look at the industry size, the size of the cybersecurity industry worldwide and its growth. When you take a look at the growth, we're expected to see that growth over the next 5 years grow from about $100 billion industry to $170 billion. That's a 70% growth projection in a very short time. Now that's certainly a projection. Could be less, it could be more, but by virtue of many of the headlines, we think that this could be a pretty good estimate of where this industry could be going. So really to summarize my portion, cybersecurity is a growing concern, not only amongst individuals, but corporations and government. We've seen a lot of the growth stats and figures. This growth isn't just pure growth. There's a lot of interesting characteristics of this growth, including some of the defensiveness in these underlying businesses and the diverse demand for cybersecurity. So with that, I'm going to turn it back to Doug to go into the next section on the webinar.
Well, thank you, Christian. And ladies and gentlemen, it's very important that everybody understands when you're thinking about an exchange-traded fund that it is always based on an underlying index. And the Cybersecurity ETF hack is based on an index that is created by ISE. And we have an expert here today to talk us through how they went about developing this particular index. I'm pleased to introduce Mark Absey. Mark, tell us about ISE and the index HXR.
Okay, thanks, Doug. ISE, the main business of ISE actually is that of an options exchange. However, there is a small group within the company that does index development and also works with folks like Andrew and Christian to help get exchange-traded products out to market. So I'm part of that group. I'm the senior manager of index and ETFs here at ISE, and they tell me I'm the guy that put the index together. So, so here we go. So, you know, listening to Christian talk about cybersecurity, he talked about a lot of different aspects of it, different data types, different locations, different ways to access that data. And when we were putting together the index, you know, it's tough sometimes with an emerging investable area to get to a succinct and very focused index. And the best way that we found, or what we found to be the best way, rather, was to really focus on companies that are providing security, but doing so for kind of outward-looking connections. So let me just give you an example of what I mean by this. So say that there's a company that has a product which helps you manage your company's servers and file access, right? So you have something within your company that, say, blocks the sales guys from looking at the accounting records or from everybody looking at the HR records. That's providing security, and there are certain ways maybe to access that information from within your company. But those really aren't the kind of companies that we're looking to represent in the portfolio. When we're looking at cybersecurity, we're taking the view that these are the companies that manufacture the hardware and the software that control kind of open access points to your data, whether it's a website or whether it's a server that is accessible online. Okay, so the difference there again, companies that provide kind of internal security, not really a focus for the index, but those companies that are kind of safeguarding the gates, if you wish, those are the companies that we're really looking for here. So, okay, so within that broad universe, we narrowed it down into two groups. And so we're looking at groups that we're calling infrastructure providers, and we're looking at another group, which is what we're calling service provider. And the difference there, and it may be subtle to some, but it's kind of a big difference to me, which is that a service provider is someone that allows you to do something securely, and an infrastructure provider is one that provides kind of capital S security. Okay, and I'll give you an example. One of the companies in the index is a company called Gemalto. They are the world leader in SIM card manufacturing. And for those of you that may not know, a SIM card is a little chip, and it's getting smaller all the time, but it's a little chip that sits in your phone or your portable device, and it basically creates kind of a connection to your cell phone carrier. Right. So when that chip is in your phone, say you're an AT&T or Verizon customer, your carrier knows, oh, this is, in my case, this is Mark Epsey's chip, and this must be his phone. And it lets them understand and know that A, I'm supposed to be on their network. B, it gives them the parameters of my account with them. Well, how much data is he allowed? What's his calling plan? What's his billing? All these types of things. And it creates kind of a secure connection of sorts between my phone and my provider, right? Now, what I do with my phone, the information, the data, the packets, if you want to get a little technical, that I'm sending back and forth to my banking site, my brokerage site, email, the stuff I do at work, on my phone, that SIM card, it doesn't really care. It's not its job to monitor that, right? The job of the SIM card is to identify me to the network and say, yes, I'm supposed to be on the network. What I do on the network, well, that's a whole other set of folks and products that manage that, and that is really what we're looking at when we talk about the infrastructure providers, right? So, the companies like the Ciscos and the Junipers and the Palo Altos, right, who are actually making these physical devices that constitute the internet itself, right? Something that a cable plugs into. There's software that sits on top of it and lets it and tells the machine what to do and how to act and how to react to certain types of traffic or certain types of action, taken on the servers. All right. So we can go on to, here we go. So we have these two groups, and one of them is this, well, like I said, the capital S security guys. The other are the service providers, which by the way, also will include some of the consulting firms that we have in there, firms like KeyW and Booz Allen. And by the way, what's interesting about those companies is that they do some government business, and they work not only in cybersecurity on a defensive nature, but also sometimes on an offensive nature too, which is a whole other thing that we may be able to do a conference call on later. But getting back to the index, though, looking at how the weightings are set between the two categories, infrastructure and service provider, we let the market caps, the aggregate market caps of those two groups, determine what the split is between infrastructure and service provider. So when we make the index, we're not saying that, oh, infrastructure is always going to be 70%, service provider is always going to be 30%, right? We build in this kind of flexibility such that as the industry grows, as we get more infrastructure providers or more service providers or both, we'll let the aggregate market caps of those set the levels, right? So there's a little bit of a market cap aspect to the weighting in this index, because at the high level, the sectors are indeed set by the market caps of the constituents within the sectors. Now, within each of those sectors, we look at infrastructure again and service providers. I always like to tell people, look, I'm a beta provider. I'm not here to pick favorites. So within each section, within each sector, all of those names are equal weighted. Okay. Now, there may be some of you out there that may be saying, well, geez, what about, there are potential biases in equal weighting, but there also are potential benefits, and again, that's kind of maybe a indexing 201 class, but suffice it to say, like I said, I'm not here to pick favorites. I'm here to provide beta. I'm here to provide exposure to this segment, and so the best way I can do that is by saying, here's everything that's equal weighted. Okay. Now, one of the other things that we do here is once we've set those initial weights, we have market cap setting the weighting for the sectors. Within each sector, everything is equal weighted. And then because we want to make this portfolio tradable, we take a look at the liquidity of each of the names, right? And so what we do is we work with the sub-advisor and we get some feedback from them, and we set levels to which we think that make the portfolio tradable once it is a portfolio. And how we do that is to say we are looking at a theoretical flow into a portfolio, say it's $25 million, $100 million, and we're saying, okay, if I take $100 million and say that's an inflow to a portfolio following this index, what does the trading for those names look like if I had to get this trade done in a day? If I flow $100 million into the portfolio, does that mean that I'm going to be 10% of a particular stock's flow for the day? Is it going to be 100? Is it going to be 200? Right? We do this analysis, and if we set and we set these thresholds, once we put those theoretical flows in, if there's a name that kind of breaks that model, goes over the threshold, we simply just reduce the weight of that particular name. So say there's a name that the model says this needs to be a 3% allocation in the index. We put it through liquidity optimization, and it says, I know you want 3%, but guess what? Realistically, it really should be only 1%. Then that weight becomes 1%, and the other 2% goes and gets reallocated to other names that are more liquid in the index. Okay, and that's done within each of the sectors. So if there's an infrastructure name that needs to be reduced in weight, its excess weight gets distributed just to infrastructure names, not to service provider. So anyway, I hope that's helpful. One other thing that I do want to mention, and I think Andrew will get into this a little bit, but as I said, this is an emerging area, at least an emerging investable area. And so one of the things that I did was I took a look at what are the effects of the announcement of a hack on performance on this index, right? And it's interesting because when I look at the total period of the index, which is December 31st, 2010 to the end of September, there were 37. There were 37 events that I looked at, and I looked at the day that the event was announced, and then each day out to 4 days after. Right. So if I look at the entirety of the index, and I say of these average of 37 events, what's in effect. On day zero, basically the index, HXR, outperforms the broad market index, in which in this case I'm proxying with SPX, with the S&P 500. It outperforms it by about 40%. If I look 4 days out, that outperformance is about 55% outperformance. Now, one of the things that's interesting, and this speaks to the growing nature of people's awareness, the companies, and focus on this sector, is if I look at this index from the target hack, which occurred in December of 2013, forward, that's 10 events that occurred since then. We see that these numbers changed quite drastically, and I chose a target event because I think that was the first time that people really realized the kind of the scope of some of these events. Target was credit card information, which had been accessed before, but it was 70 million credit cards. It was big, and nobody had really kind of seen this at this level before, and it really brought everyone's awareness to the forefront. So quickly, from December 2013 till now, with 10 events, we see the announcement date return of HXR versus SPX. HXR doing 190% over SPX on the day. 4 days out, we see 175% outperformance on HXR versus SPX. Okay, so this is definitely a sector which is coming to its own. Usually when you talk about headline risk, that's a bad thing. In our situation here, it's the opposite, right? You definitely see this outperformance. And I don't know, that's kind of my piece on returns of the index. But Doug, I'll pass it back to you.
Thank you, Mark. Very interesting stuff, and we're going to have a chance to hear from all of our speakers again. But let's talk specifically about the Cybersecurity ETF hack. And joining us is Andrew Chainin. Andrew is the CEO of Pure Funds, and he is here to talk about the specifics of this particular ETF. Andrew?
Thank you, Doug. So Mark and Christian both talked to us about the index that hack tracks and the industry that this seeks to take advantage of the opportunities available for the publicly traded companies. And before launching hack, there wasn't really an alternative to get pure play exposure to the cybersecurity industry. You're pretty much left with the decision of trying to pick what you think the best performing companies in the specific industry would be. Now, with the creation of hack, we realized there is a lot of demand to invest in this industry, yet very little knowledge or ability to do so. So when Mark created this index, essentially he said, let's take this entire industry and let's pull out those largest, most liquid companies that are doing completely different things within cybersecurity. So kind of at a very high level, you'll notice that we launched this fund in November of 2014. In about 7 months, there was so much demand, the fund had raised over $1 billion in assets, and we've seen that number increase since there. And to kind of speak to how diverse and evolving and growing this marketplace is, one I think very wise decision that was made by the International Securities Exchange was to make this a quarterly rebalance index. And because this is an evolving and growing and always changing industry, the ability to do this quarterly rebalance allows ISC to stay on top of this industry and allocate these weightings as they see necessary. Now, when someone hears about cybersecurity, they may say, okay, I get it, that's a cybersecurity company, but few people really understand and dig down deeper to find out kind of what that company does. And there is a wide range of expertise and areas that these different various companies cover that make it so important to get this exposure across the industry into these companies specializing in different areas. So you'll see from this chart right here, kind of the weighting breakdowns of companies that are held within Hack, you'll see, like Mark said, it's infrastructure and services, but you can drill down even deeper into there and look at this sub-industry exposure. And you'll see there are those hardware companies, and it surely is very software heavy, but that's kind of where a lot of the advances have been made recently in cybersecurity. So that's kind of the sub-industry exposure. Another thing that seemed very important to us when creating this fund, this index, was that you had this true global picture and representation of what is going on in this global industry. And if you look at cybersecurity, this isn't a problem that just affects people in the United States. This is something that affects everyone in the world. And the more interconnected our world gets, the more important that cybersecurity becomes to build within every new infrastructure build out. And if you look at our weightings, you'll see that the United States, Israel, Japan, South Korea, and other countries in Europe and Asia that are leaders in this cybersecurity industry have representation within this fund. So you'll notice that by picking individual securities, you might not necessarily get that exposure to the global business that is cybersecurity, and this fund gives you that vehicle. Now, just looking at a couple of the top 10 holdings, people may be familiar with some of these names, but kind of what they do may elude them. And what we could say, CyberArk, they are a company that specializes in oversight of the use of what goes on privileged accounts, kind of what Mark had alluded to earlier. This company essentially will look at the goings on within a company's network and looking at this company's database and say, okay, is someone that has access to this information, are they using this properly, or is this abnormal? Is all of a sudden, are there a ton of uploads or downloads going on? If that's out of line, it sends an alert to both CyberArk as well as that company itself, and they can start to try to figure out whether this is a threat or whether this is normal business. Vasco Data, they do something completely different than CyberArk. They do multi-factor authentication. So instead of just logging in with your username and password, they're looking at new innovative technologies to make it more difficult to access information and to log on to various accounts. So just using those two as examples, you'll see that yes, they're both cybersecurity companies, but they're each doing something completely different and have their own solutions to what is actually effective. So kind of, stepping out to see the over 30 companies that are held within Hack, you're getting exposure to companies doing so many different aspects of cybersecurity that you really have the ability to kind of capture this growing industry and the various companies that represent it and defend against the various types of attacks that are out there. So, why should Hack matter to investors? I think there are many, many reasons. For a lot of people, this provides new exposures. So before, if someone wanted to invest in this space, we mentioned you had to pick individual securities. You could invest in a broad-based technology index or an ETF that covers that, and you would get very little exposure. So someone that does believe that cybersecurity is going to be a growing area, we really carved out this industry to give investors this broad-based diversified exposure within this constantly evolving industry. Next, a kind of another ability that you get when investing in something like Hack is, like Mark said, this is a constantly managed and reviewed index, looking at new entrants into the space, existing entrants, and you're getting the expertise that drills down from a pool of over 200 publicly traded companies that are involved in cybersecurity, and you have this expert oversight of managing this index to get that full representation of what we believe cybersecurity really is, as opposed to just individually selecting or picking your advisor that may not know the industry that well, but it's just looking to give you exposure to a company in cybersecurity. Now, as a risk-reward tool, as we mentioned, cybersecurity attacks, the damages, the costs, the implications of being breached are ever rising. And by being able to invest in something that holds these companies that could essentially be the companies that are receiving increased revenues, because companies and governments and individuals around the world need to spend more on cybersecurity solutions, you're getting this exposure to a wide basket of companies in this area.
Andrew, let me jump in here and ask Christian, just, as you look at the marketplace, you're out talking to individual investors and money managers all the time. How do you see hack fitting into an investor's portfolio, and how are you seeing the security being used by professional money managers in the marketplace?
Yeah, it's a great question, Doug. Certainly so many different uses for this ETF. Some investors on the professional side are using it as an additional growth play, so they're looking at their growth allocation in their portfolio. Most of those existing growth allocations have little to no exposure to cybersecurity stocks. As Andrew mentioned, they may own a broad-based technology product, but most broad-based technology ETFs or funds have very minor, usually less than 10% exposure to cybersecurity names. So they're taking a portion of their growth allocation and taking and reallocating it into a cybersecurity to kind of capitalize on the growth of that industry and that trend. Others are using it as a trading vehicle for around events related to cyber threats and cyber attacks. So trying to capitalize on some of the appreciation potential during those unique time frames. So there's a few different kind of long-term and short-term uses that we're seeing investors on the professional side utilize hack for.
Mark, let me ask you, as you're talking to friends or relatives, about what you do, and again, you're really into the weeds in determining, the stocks in the index, but how do you explain to people what the investment opportunity is relative to hack?
It's actually pretty simple because when we get around to talking about hack and HXR and its success, we end up talking about the headlines. And, oh, did you hear about this? Did you hear about that? And I'll say, oh, yeah, that, one of the, FireEye is trying to figure out how that's happening, or Trend Micro, or, one of the things that I think is interesting is, again, kind of post-target, you start to see in 2013 and really in 2014 and going on, it used to be that there was some hack, somebody was compromised, and they just put out a press release and said, sorry, we're going to fix it. Now, when you see these events, companies will still say that, but they will say, oh, it's okay because we've now hired Trend Micro, or we've now hired FireEye, or we've now are working with our partners at Cisco or Palo Alto to make this happen. So, as I said, there's just more overall awareness of the space and the players in it. So, instead of looking at a bunch of kind of blank stares of, for friends and family, they will have heard these because they hear these names in the news and they see them and they say, oh, okay, I get it. Yeah, that is good. Okay.
Thank you.
And Doug, that I think is one of the values of owning a basket, because on one side, you could potentially own the name that receives a big contract from a large company or the U.S. government. On the other hand, you could own an individual name that actually fails to protect a large entity and see the market impact of that name. So when you're buying the ETF, because it's based off of an index of 30 plus cybersecurity stocks around the world, you're lessening your risk that a technology fails or a company has a company-specific problems. And I think that's important in an area that really is kind of an emerging but important industry.
Yeah, and that goes back to what I was saying earlier, Christian, about, I'm here to provide beta. I'm here to provide access. I'm not looking to pick favorites, and it's just about beta. It's just about access.
Let's continue here. Andrew, you have some additional ideas that you wanted to share with our audience about strategies for using hack.
Right. So I think the first one was kind of mentioned by Christian, that by picking an individual company, there's significant risk known as company risk as well as others. And because this is a kind of a volatile growth industry, and we're not sure what this industry will look like 1 month or 5 years down the road, we think that by investing in an already volatile industry, by investing in a broader base, 30 plus companies that are all doing different, specializing in different areas within cybersecurity, that this strategy allows you to reduce that individual company risk as well as reducing volatility, and really gives that broad base exposure to the many areas of this evolving industry. Another one is, we kind of mentioned, Mark had mentioned what happens to some of these companies when there's the announcement of a breach. So people could use this as a tactical play, whether to play an upcoming breach that they think is going to happen, whether it's increased spending on cybersecurity because of government new mandates requiring certain minimums of cybersecurity protocols for different types of companies that could provide a bid for those services and hardware and software. And another thing that we found really interesting is we're talking to a lot of money managers that never really used ETFs before, because they found this kind of stigma in telling their clients, I wasn't able to pick the best company in the industry, so instead I'm going to invest in the whole industry through an ETF. And what we're noticing is a lot of advisors are now realizing that they've tried to invest in this industry and they haven't been able to pick those best winners and performers in the industry. And instead of risking that stigma, saying, I wasn't able to pick the best of breed, they're saying, I don't want to pick incorrectly. I want to say, yes, I had the idea right with the industry and I invested in the industry, as opposed to saying, I knew I was right with cybersecurity, but I picked the completely wrong company. And by having
Andrew, I was going to ask you, there are individual investors might not be aware of this, but more and more mutual funds are using ETFs to gain exposure. Have you seen that happen with Hack?
Yeah, I haven't specifically seen mutual funds investing in Hack, but I think that with this increased liquidity that we've seen in the fund, several hundreds of thousands of shares traded on average every day, the large amount of assets that the fund does have, I think makes it a liquid alternative for investing into the cybersecurity industry. And I don't think it's something that couldn't be done in the future.
Okay. Please, Andrew, continue.
Sure. So, we mentioned that this is a global industry. By being able to invest in an ETF that holds publicly traded companies from around the globe, you really do have this ability. If all of a sudden there is, a large surge of cyber breaches in Australia or the Middle East or Africa or Japan or anywhere, who's going to be on the ground that's going to be able to get those contracts to help those companies? So, this fund, having companies from all over the place, they have headquarters in various regions around the world. So this gives you that exposure. That if the risks and damages of cyber attacks increase, the value for a company to get ahead of it and have that protection will also increase. You'll see, before investing in cybersecurity at a company, you wouldn't see a benefit to your bottom line, so companies would be loath to spend that money. Now the risk of being breached is so high that companies are saying, now it's time. We do need to protect ourselves here, because the reputational damages may be impossible to come back from, or the actual costs. And I think we're seeing kind of every day that we're hearing that companies want to take a bigger place in the cybersecurity industry. It's very difficult for larger, diversified technology, diversified defense companies to just start something up organically and get into the cybersecurity industry. So what we're noticing is it's faster for them to actually just acquire companies in the cybersecurity space. So we're seeing a lot of M&A activity, and hopefully companies in the fund may potentially be some of those beneficiaries. And kind of lastly, this is an area where no matter how much your company is making or losing in a year, it doesn't change the fact that you need cybersecurity. So we're seeing this as almost potentially non-correlated type of asset class. Yes, it's technology. It's also a little bit of defense. It's also a little bit of a utility. It's also a little bit of an infrastructure kind of play. And no matter what's going on in the economic cycle, it doesn't mean that companies are going to be able to spend less on cybersecurity. So it could be this interesting kind of asset or exposure to own for investors that are looking for potentially uncorrelated returns during various cycles of the economy.
Okay, what I want to do now is kind of go around the table and just ask one more time kind of your closing thoughts on this investing opportunity and the security itself. I wanted to make a couple of personal finance statements for our listening audience today. First of all, you have to understand that there is no dividend with Hack. Hack is a growth play in your investing portfolio, and Hack, of course, is going to be part of your stock exposure and specifically your technology exposure. So you've got to size the security accordingly because it is much more concentrated. Also, I'll mention that many of you might have a Roth IRA, and a Roth IRA is a great investing tool. It's a great tool to use in terms of passing on wealth to the next generation. And I think that Hack is a great tool to actually include in a Roth IRA because it has outstanding long-term growth potential. And also, when you're taking a look at your portfolio, whether it's your IRA or your taxable account, of course, the security works for both. But I will mention that for your taxable account, many times people are wanting to get long-term capital gains. Well, when we take a look at the next 1 year, 3 year, 5 years, of course, you need a 12-month holding period to get a long-term capital gain. I think we all agree that there's great growth potential in Hack as a long-term investment play. So I think you do have a greater probability of being able to get a long-term capital gain if you hold the security for more than 12 months. So let me go back to Christian. Christian, any closing thoughts that you have for the audience on the investing opportunity in Hack and cybersecurity?
Yeah, thanks, Doug. I'd just say that there's certainly a lot of growth potential in cybersecurity. There's certainly also a lot of volatility, and it's an emerging industry. So I think the ETF is something to consider for someone who wants to take a more diversified approach to investing in this kind of essential area in today's economy and, frankly, today's digital-oriented life.
Thank you, Christian. Mark, your thoughts as we close out today's webinar.
Sure. I mean, when we were putting together the index, we thought that it would resonate with investors. It turns out that it did, actually beyond our expectation. But, if anything, it showed us that investors are looking beyond Qs and are looking beyond kind of the broad market type investments. Now, how they're actually using it and how they figure out to use it, that's another matter. But at least what used to be called kind of niche or ultra niche type areas are actually getting serious consideration now. And that, of course, bodes well for me as an index provider. It means that I don't have to try and build a Q's killer or something. I can go and I can focus on some pretty particular spots of the economy and try and find value for investors there.
Great. Thank you, Mark. And Andrew, your closing thoughts.
Sure. Well, we're extremely excited to be able to provide the market with this extremely in-demand exposure to this industry. And, Hack is kind of just, a first example of what we're looking to do and providing investors with exposure to many interesting areas, especially within the technology space. And I would just, suggest that people check out our website, purefunds.com, and look at what we're doing and creating other new first-to-market ideas. Because I think that if you find something like cybersecurity very interesting, you'd be happy to see the other things that we're, expanding into. And, please feel free to reach out to us, with any questions with the information provided on this slide. And, we hope to create more funds that are of high interest to your following.
Fantastic. Thank you, gentlemen. This has been a great presentation. Ladies and gentlemen, remember you can send me an email. My email address is askdoug@dougfabian.com, and we'll be bringing to you more presentations like this as your interest in exchange-traded funds and the industry continues to evolve. Thanks so much for joining us today.